The equivalent happened in Ethereum, and my forecast is it's a matter of time that Bitcoin gets to $100,000.
Hey guys, welcome back to Library of Wealth. Today we have Mcglone giving us his Bitcoin price prediction for 2022. Mcglone will also walk us through the crypto market and the state of uncertainty that's leading to the biggest inflationary environment in history. He'll talk about Bitcoin and why there was a huge change in his sentiment towards the dominant crypto asset. This definitely shows that Bitcoin's use case is starting to make itself known even to its staunchest critics, something that has been inconceivable in recent years, and why he believes power is changing from the fiat money world to the Bitcoin world. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
I think wheat is one of the most significant in terms of how much Russia, Ukraine percentage of global exports, maybe up to a third, but it's also food. And to me, it's just part of that whole tide that I think is not a potential for recession, but almost a guarantee we will get a global recession out of this. And add to that, those of us who remember living through the Cold War, what you see in the tape that, quote, the Russians are coming has happened, and it's pretty horrible. So I think this is just part of that narrative. So wheat is up, limit up its second day in a row. It's right near the all-time high, which is significant. In 2008, it's taken that long to get there. But the key thing about wheat, Danielle, is it's typically you can bring on that supply right away. Most notably from Canada and the U.S. because you just plant more wheat and you bring on land that you weren't planting, or you switch to different crops. But it's that cut back in fertilizer supply from Russia. That's significant for the long term. A lot of that, Russia is one of the largest suppliers of nitrogen fertilizer on the planet, potash and stuff like that. And if you cut back fertilizer, we're probably going to have a long-term drop in yields. Now, that's not going to affect North American producers because we have plenty of nitrogen, anhydrous, as we call it in the corn belt, which is where I'm from. But that, to me, is more enduring. And that, to me, is why it's significant, and it's also why I think the grain prices are going to stay high for a while versus crude oil and copper much more likely just to collapse, because that's what they typically do in these environments.
Interesting. Well, across the board, we are seeing banks and forecasts turning extremely bullish on commodities. You know, Goldman Sachs saying we haven't seen a commodities crunch like this in the longest time. So overall, how does this change your outlook for commodities in 2022, Mike, given this black swan event that we're seeing of Ukraine, Russia?
Well, that's the key thing. Goldman Sachs was predicting it before for organic demand pull reasons, which I didn't really agree. This is a black swan event. This is the most significant armed conflict most of us have seen in our lifetime. With the analogy I heard this weekend, which I very fearful was, it basically have the equivalent of a global suicide bomber with nuclear weapons who doesn't care. And there's not much we can do. And that's just what, so the significance is the market's priced in for a major supply shock, meaning that supply from Russia, crude oil, is going to leave the market. That, to me, is wrong, because a lot of that supply is going to go to China. That was an agreement from before the Olympics, and China is still the world's largest importer. The significance of the numbers are quite damaging for the price, and that is Russia's supply was maybe, in terms of net exports, maybe 6% of global exports of crude oil. It's about the same Kuwait was in 1990. I remember being in a trading pitch, and crude oil basically went from 20 to 40. It got to about 2 times its, I'd say, 60-month average. We just reached that this morning. We got to 130. So if there's any sign of a market that's going to do what's done in the past, sure, we can keep spiking like this, but at some point you're going to turn around. And it's going to be down 50%, not in a day, but that's just what's happened in the past, because I think the greater risk is demand destruction, global recession, and that's happening. But the bottom line for us, Danielle, is North America commodity producers will crush it in this environment. The average cost of U.S. shale crude oil is now below $40 a barrel. That's been declining from 70 in 2014. And if you add into Canadian oil sands, there'll be a massive surplus of liquid fuels. I say liquid fuels because I'm from a farm background, and a significant portion of unleaded gas is now ethanol. That this is going to be a major dichotomy. It's going to push Europe mainly into a recession, push Russia, I think, into a complete economic collapse, and the U.S. and Canada should come out fine once we get past this recession. It's just a matter of time. I mean, we all know Germany kind of kicked out the nuclear too fast and went solar too fast, but that's just going to completely accelerate the incentive to go renewable. I mean, I have an electric car, I have solar panels, so I know there's some experience. They're great technologies, but you just have to make sure you have that backup. My electric car is a plug-in hybrid, because when I need gas, it's great. You know, it's really cold. There's nothing like fossil fuels. So it's going to completely accelerate. And I think this is going to push Russia back to, you know, way back to the old world that is dependent on fossil fuels, and the rest of the world that will be no longer dependent on fossil fuels from dicey sources. And we're going to find alternatives. In the meantime, the U.S. is the world's largest exporter of liquefied natural gas. That's going to accelerate, not so fast, but it'll all go into Europe, a lot of it. You know, so the whole natural gas will go up on a world scale. But if you look at the U.S., the price around 5 on the screen is well below the peak from 12 in 2005, and it's still about 2 times the U.S. cost of production. I think it's a matter of time that gold crosses that $2,000 an ounce Rubicon of resistance and never looks back. It's so overdue, technically, fundamentally. I think a key indicator for us, Danielle, it's obviously it didn't do well in inflation. It's not doing well in inflation. Its deflation is a greater risk. The key indicator I'm watching is that U.S. 30-year long bond, which I expect to decline. I expect the gold to break out. But we have to admit, gold does have major competition from the digital version, that's Bitcoin. So I think gold is naked, if not paired with Bitcoin anymore. Now you see Bitcoin's down in the year, but it's way outperforming on a risk-adjusted basis the stock market. So what you're seeing right now, I think, is the whole tide is going out, which is helping gold. Finally, the stock market is giving up some of those excessive gains for the last few years. Gold should benefit. Bitcoin's going down initially, but then I fully expect it to come out ahead. And but the key thing about gold is it's being replaced by digital gold. That's a fact. It's a question of endurance. And I view gold as basically naked, if not paired with some Bitcoin in portfolios. And I have to admit, I've thought that for a while, but the prices you see on the screens right now and see these spikes, the key rule, and let's use that macro, the biggest one of all, crude oil. The key rule is crude oil has dropped 80% 3 times since that peak in 2008. We're still below that peak for a reason, because North America is the world's largest net exporter, and before we were an importer. And that's what's happening in commodities. So sure, I have to point out the facts of where the demand's going and these and the shocks we should expect from demand at these levels. It's just a rule. It's just a rule of producers. When they make that much money, you got to be careful with the actual underlying price. I see that, Danielle, and I remember I have my trading coat out in the trading pits and dealing with customers who would get stopped out and lose their jobs or their home. And I feel bad for the people who are getting hurt there. And you know what's happening. You know you're going to see those stories, but don't underestimate the higher price cure. And again, you mentioned early on, this is a major black swan event. It might be the biggest in our history when you have this major war in Europe. And let's just look at who's going to bet, how we can properly adjust and make our decisions to do well in this environment. And the good news is North America is a bastion of safety at the moment. The equivalent happened in Ethereum, and my forecast is it's a matter of time that Bitcoin gets to $100,000. It could go to 31st as the tide ebbs, as we mentioned. I fully embarrass the stock market because of recession. It'll drag Bitcoin down, but the facts of Bitcoin is supply is going down. That's by code. Demand and adoption are going up, and I expect that to continue. And the key fact about Bitcoin is it's less than 1% of global portfolios. Yet I fully think that most managers on the planet who run money realize we got to have some of this, just because if it just continues to do what it's been doing in a world going digital, this is a global digital benchmark, might as well get allocated. And it's proven all the naysayers wrong. So this year to me is another one. It's down about the same as the NASDAQ, despite the fact it has a much higher volatility. So I see divergent strength this year. I think it can go lower in the short term, but in the long term, to me, $100,000 is a matter of time.
Mike Mcglone says this is a make or break time for markets around the globe, as the crypto industry at large has too many working parts now to be stopped. Although he does have a slightly different opinion on government regulation, only time will tell. Rickards isn't surprised about those that hold a favorable position with the United States government, especially those that support the dollar as the world's reserve currency. He doesn't believe governments should be involved and says that Bitcoin's longevity is designed to survive without intervention from any governing body. What do you think about Mike Mcglone's perspective for Bitcoin for 2022? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.